Hi there, it's Jeff from RV Parenting, and in this video we're getting into the world of RV financing. What that looks like, what kind of interest rates you can expect, what kind of loan terms you should consider, what kind of credit score you might need to qualify for a loan, and how much you're actually going to pay at different increments along the way depending upon how long of a loan term you choose. So let's get into it right away. So first of all, can you finance an RV for 20 years? The answer is yes. Now, whether or not that's a good idea, we're going to get into in just a second. But typically, you would finance an RV somewhere between 10 and 20 years. Those are the most common terms, 10, maybe 15 or 20-year terms. And it's somewhere between a car loan and a mortgage. Just think of it that way. Don't think of it like a car loan or you're going to drive yourself crazy. It's really more like a mortgage. And after all, this is kind of like a house, but it's got some aspects of a car loan in there too. And what kind of a credit score do you need to qualify for an RV loan? Well, typically you're going to need somewhere between 660 to 700 plus. If you're significantly below 660 on your credit score, your FICO credit score, you're probably going to have a tough time qualifying. And if you can qualify, you can expect a much higher interest rate because of that. Right now, of course, the supply and the demand effect dictates how many RVs dealers typically have on hand. And when demand is high and supply is low, they're going to be pickier, and more importantly, their finance departments are going to be pickier about who they give loans to. If they've got a plethora of RVs out there in the lot and nobody's sniffing around, they're going to be a little bit more flexible. But somewhere between 660 to 700 plus is typically what you're going to need to qualify. What's a good interest rate for an RV loan? Well, somewhere between 4 and 6% is going to be fairly common. It's not going to be nearly as inexpensive typically as the interest rates you see on home loans. It's going to be closer in this regard to a car interest rate, but it's probably going to still be even higher than a typical car loan. But somewhere between 4 and 6% is currently the average. Now, the big question, of course, is should you finance an RV? And I did finance our RV. My wife and I bought an RV in the fall of 2020, Class A Newmar, and we did indeed finance it over a 20-year term. We did that for two specific reasons, really, because normally we don't operate with debt. We have credit cards that we pay off every month. We have no other loans or car payments or anything else like that. And we've been that way for over a decade since discovering Dave Ramsey. However, in 2020, as all of you know that are watching this, it was a crazy year. And we found ourselves in a situation where I could work from home, our girls could do school from their laptops, and we decided it was an opportune time. My wife's also in college, but she was doing school online as well. And it was really an opportune time to get an RV and travel around because all of us could still get everything done we needed to get done from the safety of and comfort of the RV as long as we had Wi-Fi. So we did a couple of things there. We upgraded our phones so that we had a lot of data for hotspot tethering if we needed that. After all, RV campgrounds are notoriously bad for Wi-Fi. And then we went ahead and we bought the RV. Now, had we waited until we had saved up enough money to pay cash for an RV, for one, we probably wouldn't have been able to get as big of an RV as we did. But also it would have taken a lot longer, and by the time we had saved up, we would have missed that window of opportunity. So we did indeed take out a 20-year loan on our Newmar, but we also have the intention of paying it off within, I'd say, 12 to 18 months, based on some other things that we know are coming down the pipeline for us financially. So we would not have taken that loan out with the intention of actually taking 20 years to pay it off. Of course, the longer the loan term, the more you're going to pay overall in interest. So what are some actual numbers? What are you actually going to pay for an $80,000 RV if you're financing? And of course, the answer depends upon the interest rate and how long a term you're financing it for. But let's assume you're buying a brand new $80,000 RV, you're putting no money down and you're getting a 5% loan, just to make the math easy. So if you finance it for 10 years, guess what? That $80,000 RV becomes $103,000. So $23,000 in interest just to take out the loan. Now, what if you're paying for 15 years, a 15-year loan on that $80,000 RV? Now you're paying $115,000. Guess what? That's $35,000 in interest you'll be paying if you take the entire term to pay it off. And then lastly, if you're getting a 20-year loan on that $80,000 RV, you're going to pay a whopping $126,000 just for the glory of financing it. That's $46,000 just in interest payments on that $80,000 RV. Of course, that's a terrible thing to do financially. Just think of what you could do with that money if you just put it in mutual funds that were earning 8 to 10% a year. You'd make a killing as opposed to helping somebody else make a killing. So do take out a loan if you have to. Don't take the entire term to pay it off. It's a terrible financial plan. Next question, of course, is should you buy a new or used RV? And we did buy a new RV. Again, going back to the 2020 scenario, it was high demand and short supply because a lot of the manufacturing facilities were shut down for a period of time in 2020, and everybody was working from home. Nobody was flying on vacations, so demand for RVs skyrocketed. We didn't really have a lot of options. We looked for about 2 months, and we saw very few used RVs of quality that were on the market. We ended up pretty much having to buy a brand new RV just to make our dream happen. And again, the timing was perfect for us to do it then. Had we waited any length of time, we would have missed that window of opportunity. So for us, it made sense to buy a new one. Normally it will not, and let me explain to you why. So first of all, when you drive that RV off the lot, over that course of that first year of owning it, you can expect it to go down in value between 20 and 25%. Of course, the more miles you put on it, any accidents, things like that are going to depreciate it even more. But just in pristine condition, driving it off the lot and using it a little bit on the weekends, you're going to expect that value to go down by 20 to 25%. But more importantly, almost every RV, even the most reputable manufacturers' RVs, almost all RVs are going to experience some kinks. They're going to need some warranty repairs. Maybe a slide out is not working properly. Almost all RVs are going to need a few things those first couple of years as they just kind of work through the kinks of it being a new RV. When you drive it off the lot, all of a sudden you're going over speed bumps and train tracks and different kinds of campgrounds, and you're putting it through the ringer. And all of those things kind of can cause things to shake loose, cause things to not work right. So typically, if you were to buy a brand new RV, you're going to expect to get some warranty work done those first couple of years, even if you're buying from the most reputable brand out there. By comparison, if you buy a RV that's 2 years or so old, it's probably already had all of that stuff taken care of. And so not only are you going to save that 20 to 25%, but you're also not going to have those warranty headaches either of taking care of that brand new RV service that almost every RV owner has to take care of. So that's 2 great reasons to consider buying a late model RV that's maybe 1 to 2 years old, that I would say, you don't want it to have super high mileage because that means it's been driven a whole lot, but you also don't want to have it super low mileage either because that means it's probably just been parked and sitting somewhere, which also isn't good. So I would say somewhere between 4,000 to 7,000 miles for a 1.5-year-old RV is about right. So look for that to get the very best deal. Now, if you do take out an RV loan, how can you pay it off faster? And there's several ways that you can do this. Based on the math that you heard me go through earlier, you're going to want to do at least one of these things at least some of the time. Of course, sometimes some of us get strapped for cash and we have other things come up, medical bills and things like that. Yeah, but these are strategies you can apply when you have the time and the money, just to kind of help speed that loan process up. So what are those things? Well, make bi-weekly payments instead of a monthly payment. And what I mean by that is mail half your payment every 2 weeks instead of making one payment every month. And the way that that works is not some sort of magic. Basically, the way that it works is not every month is exactly 4 weeks. So if you make payments every 2 weeks, you're going to end up making one extra payment over the course of a year. Of course, the other way to do that is to simply make one extra payment each year, and you'll speed that up. You can also just sort of round up your monthly payments. If your monthly payment is $1,300, pay $1,500 when you have that extra money in your bank account. Pay $1,600, or maybe even just pay $1,400 if it's a leaner month. Just rounding up a little bit will make a big difference over the term of that loan. Then, of course, you can also refinance if you kind of stay on top of the interest rates, also stay on top of your credit score. If you pay off something and your credit score goes up quite a bit and you notice that RV loan terms and interest rates have gone down, if you can save at least a point, it's probably worth the cost of refinancing that loan to save you money over that length of term. And then if you can, I would also go for a shorter loan term when you do refinance. The last question that people have with regards to this is it cheaper to buy an RV direct from the manufacturer rather than going through a dealer? Short answer is yes, and I'm going to get into exactly how much cheaper here in a second, but there's some other intangible benefits you're going to want to know about as well. First of all, you're going to deal with one person if you go to an RV manufacturer. They are going to be an employee of that RV's company. They're going to know everything there is to know about that RV. It's not a salesperson that deals with several different manufacturers. It's not a salesperson that, you may not know this, but it's not a salesperson that just got hired the week before. This is going to be one person who works for that company who knows everything that there is to know. They may or may not be commissioned, but they're going to be experts about the RVs that you're looking at. The other thing that's really cool about buying direct from a manufacturer is that this person is going to be able to make all the decisions. There's going to be none of that squirrely used car salesman kind of thing. Well, let me go check with my manager and see what he can do. There's not going to be any of that when you deal direct with a manufacturer. The person you're talking to is going to be qualified to make any decision possible with regards to the financing, with regards to the pricing, options, and everything else. So just one person makes that smooth sailing. Of course, the downside of going direct to a manufacturer is you're not going to have the options of going to a dealership where you can look at potentially several brands of RV. You're just going to be dealing with one, so make sure it's one that you like. You will also have to establish a place later where you're going to get your RV serviced, because most of us probably don't live right next to an RV manufacturer. A lot of those RV manufacturers are on the East Coast, maybe Ohio, Amish country, places like that. And most of us aren't going to live where it's going to be convenient for us to take the RV there for servicing. So you're going to have to find a place near where you live that's authorized to perform warranty work on your RV. And of course, you know, these people may put you lower on the priority list because you didn't buy the RV from them in the first place. And then lastly, you're also going to have to find someplace else to buy any sort of accessories or options. Typically, when you go to an RV dealer, they're going to have a store where you can buy all of the accessories that you need. Now, oftentimes these things are cheaper on Amazon anyway, but sometimes it's convenient to just kind of get everything there while you're picking up your RV. And in a lot of cases, that's not going to be an option if you're actually at the factory where they manufacture the RVs. But generally speaking, it is a great idea to buy direct from the manufacturer where that makes sense for you. And I mentioned earlier that I was going to tell you how much you can expect to save doing it that way. And typically, you're going to be able to save up to 28% off of the manufacturer's suggested retail for that particular RV. Now, dealers will discount also, but oftentimes they're not going to discount more than 20% off. So probably you can expect to save, I would say, somewhere around 8% over what you could get from a dealership if that dealer was giving you the maximum discount possible. How much they're going to be willing to negotiate at a dealer, of course, goes back to that supply and that demand. If they have high demand and low supply, they're not going to give you much wiggle room. So you could definitely save even more going direct to a manufacturer. But if they get a ton of RVs in their lot and nobody's coming in, it's the off season, they're going to be willing to go probably up to 20% off of that sticker price. But you can still save, like I said, up to 28% going direct to the manufacturer. And so those are the ins and the outs of RV financing. I hope this video helps you. Again, you can definitely finance an RV for up to 20 years, but I don't recommend actually taking 20 years to pay that off. Again, that $80,000 RV that you bought at 5% interest with no money down, you're going to spend $126,000 if you finance that thing for 20 years. And you could do a lot for your own personal finances by investing that money instead of giving it to somebody else. If you like this video, please give us a thumbs up. It sends a great signal to YouTube, and then they show it to more people just like you. But for now, I'll see you in the next video.